Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to have a look at a lovely Holy Grail long trade setup on the Euro Canadian dollar. This is one of my favorite trade setups in MTPredictor and one of the reasons MTPredictor was first developed over 17 years ago now. But as usual, we have to start with our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken. They're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. I'll put that another way. All professional traders know and understand, but more importantly accept, that losses can and will and do unfold. It's not about avoiding the losses. There will always be losses when you are trading. It's about keeping those losses small and hopefully over time having an approach that have profits that are larger than the losses. Right, let's now come down and have a look at a chart. This is the trade setup I'm looking at here. It's the Euro Canadian dollar on a 1 hourly chart, and it's this TS3 HG setup here. So I want to just go through and see how we'd uncover trade setups like this. Because remember, MTPredictor is not a black box system. We don't follow all our trade setups blindly as if they were just a mechanical system. We do that because the markets are random half the time, and basically half the time should not be traded at all. You basically can't get any discernible patterns. However, within that sort of randomness, about half the time or maybe just slightly less, the markets have a clearer picture, and that's when you can do more meaningful analysis. So the question begs then, how do you know when to start? How do you know when the picture starts to become clearer? Well, for this we do our multi-time frame analysis. In other words, we look to start our Elliott wave sequences or look for patterns when we get support or resistance or meaningful support and resistance on a higher time frame chart. This is what I call my isolation approach to Elliott wave. So for this, what we do is go to a higher time frame chart, and that's a time frame between 3 and 5 time frames higher. So on a 1 hourly chart, it would be the 4 hourly chart. So I'll go back to that, and what I want to do is go back to, this is where our TS3 Holy Grail trade setup unfolded on the hourly chart. So I want to go back just before the last major pivot low. So I'll just use our training mode here, and I'll jump back to here somewhere. There we go. And what I want to do is, I'm not looking at the setups on this higher time frame chart. I'm just looking for areas of support and resistance. So I go back to the last pivot low, which was here. Can you see I'm circling it? I right mouse click and undo decision point. Now can you see how that gave an area of support out in advance? In other words, that was on your chart before the market even got there. In other words, it was preparing you in advance for potential support. If I go forward, can you see how the market then came down into that support level and then started to make meaningful support? In other words, started to rally off that. And this was on the 4 hourly chart. So what we do now is then go down to the shorter time frame. In this case, it's the hourly chart. And can you see now how the market came into that higher time frame support there? So in other words, at that point in time, you can then start looking for Elliott wave patterns. In other words, that's where you start your idea that the market's starting to get a bit clearer. If I now do our training mode again, I want to jump back to this setup here. So what we're looking at here is, whoops, sorry, I didn't mean to do that. Let's bring that down a bit. This is where we start because it came in and made meaningful support at higher time frame support. Can you see that? So this is the point in time the picture sort of gets a bit clearer. The market then made an initial rally up. In Elliott wave terms, this would be considered a wave 1. It then made an ABC correction down. If I put the Elliott wave on here, can you see this? This is an ABC correction down into a larger degree wave 2. If I put the major Elliott waves on, can you see how that came into a large degree? It's actually labeled wave 2 or B, but because this is coming off a major support zone here, this would be a wave 2. Why is this so important? Well, it's important because after a wave 2, in Elliott wave terms, we normally then get a strong wave 3 move. So in other words, this is likely to have a strong move. In Elliott wave terms again, the wave 3 is normally the strongest and longest in a completed 5-wave sequence. So if I clear everything off, and I now, whoops, I'll just take that arrow off. If I now place the analysis on this blue buy bar by right mouse click do analysis, can you see this is what the trade setup would have looked like at the time. We use correct position sizing. I'll just change our account settings here to go back and do normal Forex on a mini account, just do that, or sorry, a mini lot, and there you go. It gave you the position sizing, in this case less than 2% of a sample $20,000 account, so that would be going long 17 mini lots. But the important thing is that if this trade setup goes wrong, and remember trade setups will go wrong and make a loss, this will be what we call a 1 risk unit loss. But if the market gets up to the target, which in this case is the typical wave 3 WPT, because this is anticipated to be a strong wave 3 rally, the profit will be 6.5 or 6.5 times greater than initial risk. In other words, this is what we're looking at. We're looking at or looking for trades where the profits are large in relation to the initial risks, not necessarily trades that go with you. Remember, trading is a speculate or business of speculation, therefore you always will have losing trades. So the idea is these, when the losses come through, they're kept small, but when the profits come through, they're large. If I turn trading mode off, just rescale the chart, you can see the market did actually go up to the typical wave 3 WPT. If we look down at our MTP trend indicator here, you can see when it hit that target, it was actually what we call strong. In other words, it was beyond this grey strength band here. When this happens, we assume that the market isn't trending, and therefore we want to run the trade a bit further. So this is when we use our ATRStop, which is our blue dots in this case. So if I take it up to there, that's where the market then crossed back down through our trailing stop. So in this case, the profit would have been just over 8 times the initial risk. On the initial trade setup, our MTP trend was blue, gave you added confirmation that indeed the large view trend was up. So this is a good example of not only seeing how markets go in cycles, but also the unique isolation approach we use to Elliott wave analysis here at MTPredictor, which was developed by myself over the last 30 years. In other words, we look to only analyze markets when the picture's clear, on the understanding that about half the time the picture's not clear and markets are random. So we do this by first looking for a meaningful support and resistance on the higher time frame chart. In other words, we went to the 240-minute chart here. The market then came down, found meaningful support at that. After the market started to rally, we then came back down to the shorter time frame chart and then started looking for our trade setups. And again, the favorite one for me is this, what we call the Holy Grail Trade setup, because it is designed to catch the end of a wave 2, which then is the start of a wave 3, which in Elliott wave terms is normally the strongest and longest in the completed 5-wave sequence. So this represents the largest potential profit for the smallest initial risk. You will see that there's a little history triangle here when our MTP trend went grey. So that's why we don't just do blind mechanical trading and just take all the trade setups with our MTP trend, because this of course would have meant you'd have been going short at this particular point in time, which you don't want. And of course we wouldn't want to be going short because we're anticipating the market is going to rally and going to rally in a strong wave 3 kind of swing. So hopefully that's a good example of not only our multi-time frame analysis in MTPredictor, but why we use my unique isolation approach to Elliott wave in MTPredictor, and why we then go to the higher time frame support and resistance areas, which are our DPs on our higher time frame support and resistance, and that's where we start looking for our Elliott wave sequences. And one of my favorite trade setups in MTPredictor is the Holy Grail Trade setup, which is designed to catch the end of a wave 2, to then trade the wave 3, which is normally the strongest and longest in the completed 5-wave sequence, and therefore represents the largest potential profit to smallest initial risk, or the largest profit to losses when the losses come through. And as such, I think it's one of the best trade setups you can get. And here's an absolutely great example that's literally just unfolded on the euro Canadian dollar on a 1-hourly chart.